But is there a sense here that a lot of the gains that we had in the first half of the year, that is it, that there really isn't a significant catalyst, at least one that's visible, that's going to move this market materially higher?
Yeah, look, it's a good question and one that's probably reasonable after a near 18% move higher. And if you think about the period between March and end of July, the S&P almost moved in a straight line higher with no real 5-10% correction that we're used to along the way. And in fact, the NASDAQ was up nearly 30% during that period. So what we'd say is one, a period of consolidation, a pullback, not only healthy, but probably a sign of caution and healthy caution from a market that's gone up pretty far, pretty fast. So we'd say, number one, we would expect, in any given year, the norm is 1 to 3 corrections in that 5 to 10% range. We are probably due for one. So some caution is prudent in our view here going forward. But we do think some of the underlying fundamentals that probably the market picked up on during that, 6-month stretch are still intact. So that includes, inflation trends that are moving in the right direction, a Fed that is potentially stepping to the sidelines, and they've indicated 2024 maybe the year they start moving rates lower. And then, of course, we have this ongoing and increasing sentiment around the economy, which is now showing signs that perhaps we won't enter a period of at least 2 quarters of back-to-back negative GDP growth and outright recession. Slowdown may be still likely, but the market has kind of embraced this soft landing scenario. And we think all 3 of those probably were reasons that the markets and walls of worry that the market had climbed, but we do think they're still intact as we head into 2024. We think a period of consolidation or a pullback may be an opportunity, especially if you hadn't participated in those very rapid first 6 months.
Well, that raises the questions about volatility, or rather the lack thereof. I mean, basically, you had that big spike, I think it was back in March or whenever, in the VIX and some other volatility measures, but it's pretty much been a stair step down ever since here. Is there a sense at all that maybe there is maybe too much complacency, I guess is what I'm getting at, Mona, that people don't really price in the idea that things can start to pick up?
Yeah, look, I think the valuations speak for themselves, and we've gotten most of this move driven by valuation expansion in the market. We know earnings growth this year will likely be flat year on year and maybe a pickup in 2024. But when earnings growth are flat, really what's driving your market expansion is a valuation expansion. And so then we take it one step deeper and look underneath the surface, and what we're calling those magnificent 7 or top 7 large cap technology stocks that have really moved the market. The valuation there still about 28 times next year's earnings. But when you look at the rest of the market, that 493 that are left in the S&P 500, the valuation there are much more reasonable, 16.5 times earnings. So next year's earnings, that is. And so really, when we think about the opportunity, we do think that the valuation expansion can still happen in some of the more cyclical parts of the market, some of the parts of the market that haven't participated as heavily. And when we think about, coming out of a period of a softening or downturn, small caps tend to lead, cyclicals tend to lead, international tend to lead, and all of those we think have better valuations as well.